Welcome. Good afternoon, everybody, and thank you for joining us today. I'm Derek McPherson, and with me on today's webinar is Jacob Willoughby, my partner in research here at Red Cloud Securities, Inc. And for something a little different today, we're going to discuss our recently published 2020 mid-year outlook. Remember, one of our initial webinars was kicking off with our 2020 outlook, and so this is a nice follow-up to that. You can see on the chat and link to our research site, and that you could download this report and many others from there. While we are going to have a bit of a formal presentation on our half 220 outlook on specific commodities and our updated endangered species list, I think we're going to try to get to as many questions as we can from the audience. So if you have questions, please feel free to post them in the chat at any time, and we'll try and answer as many as we can in the time allotted. Format of the webinar: Jacob and I will give a short formal presentation, and we'll start there, and then we'll take your questions live. So as I said, post them up in the chat, and we'll get to as many as we can. So to start with, I'll handle the disclosures. For Red Cloud Securities, I'd like to highlight that this webinar is for information purposes only and should not be considered a solicitation to buy or sell securities or a recommendation to buy or sell securities. And we note that this call does not take into account the individual situation or needs of individual investors, and participants should rely on their own investigations and seek their own professional advice before investment. And for our disclosures, please see the disclosures at the end of this document or on our website for company-specific disclosures. So now we'll get started talking about our updated outlook for a COVID-impacted world. So to start with, we updated our themes for 2020, and I think, I don't think for anyone who's on this line, it's not a surprise that the gold bull market is on and here to stay. We've seen record amounts of balance sheet expansion and low rates, and I think that those things are going to keep pushing the gold price higher as we knock on the door of 1950 here. One of the things that we've seen in this run up is that is a move down cap. We've seen small and mid cap companies typically outperform in a bull market. We've already seen this move from large caps to small caps, and now we're expecting to see a bit of a move into the mid caps as well as cash flow generation becomes a paramount at higher gold prices. And the last, stay in the precious metals, we continue to like silver. Silver has been on a bit of a run over the last week and a half or so, with the putting pressure on the gold silver ratio, and we expect that to continue to decline and silver names to continue to outperform. We've seen a lot of silver names have big runs recently. And then the last piece is that we expect gold and M&A to continue. What we've seen early in this year is Chinese state companies buying assets, buying sort of unloved assets in higher risk jurisdictions, and I think that's a trend that's going to continue into half two. And we've updated our endangered species list to reflect that. Jake, on copper?
Yeah, so we've seen a surprisingly bullish outlook for copper lately, and we're in an unprecedented situation because we have a very obvious global recession and a copper price that's moving higher. This move has been really a function of two things: a resurging Chinese economy and production difficulties and cuts from COVID-19 and mismanagement of the virus in the top two copper producing countries of Chile and Peru. So we recently saw copper hit $3, and it's come off a little bit from there, but we expect these headwinds for copper output to remain in place for some time and should lend good support for copper here. In the nickel space, we saw some announcements recently from the Chinese to go ahead with large infrastructure projects to support the economy, and we think that bodes well for nickel. The problem in nickel really is that there are very, very limited places to invest. We'll talk about a couple of our top picks in the nickel space a little bit later on.
Another commodity that we're very bullish on, with the spot price being up 30% year to date, is uranium, and we think that COVID-19 has actually squeezed us into a new bull market with uranium demand remaining flat, but supply being significantly curtailed. And we'll talk a little bit more about that later. PGMs was something we were very bullish on at the beginning of the year. There were strong fundamentals in place for a continued run in particularly in palladium and rhodium. Those fundamentals still exist to some extent, but they're now economic dependent. And what we're seeing a bit of a strength lately with South Africa still production impacted and Chinese economy ramping back up, and so we could see that resume. But I think we're going to need more of we believe we're going to need more of a global impact for PGMs to really have a move upwards. But those fundamentals that were in place pre-COVID will be in place post-COVID, and so could be a place to be. And then go ahead.
Oh, sorry. Go ahead, Derek. You can finish up there.
Yeah, and then lastly on battery earths, battery metals and rare earths, or battery earths, as I was about to say. But on battery metals and rare earths, both those are commodities that maybe in the longer term that we like, particularly in a deglobalization with a deglobalization trade of North American assets. But I think that in the context of development, we think both are sort of need a global recovery to be really to become really bullish on. So taking all those themes into account, coming into a post-COVID world, we've updated our top picks. We like to hold ourselves accountable for what we said in the past, and so you can see on the bottom part of this slide, our half one picks are there, and some of those names have carried over into half two. But I think in the context of the fact that we were picking precious metals, base metals, battery metals, and uranium names, I think our overall performance was pretty reasonable. Especially in a couple of areas where the majority of companies severely underperformed, and so being up 35%, and so we've carried that over. With taking that information and our new themes, we've carried that over into our new picks. So for precious metals, and we'll just go through these quickly, and if anyone has any questions, we can dig into them deeper in the Q&A period. Karora Resources, this is the former RNC Minerals, remains a top pick. We think management over the last years created a lot of value, and it's just starting to get recognized by the market. And we think this is a company that has more room to run. On Seabridge, this is a tailor-built company for this type of market, has great leverage to the gold price. And we think you still, and while you're going to get that upside with the gold price moving, you also get a free option on the potential JV, which we think could have a significant impact on the share price. And lastly, from my precious metals picks, a new addition to our list is Grand Columbia. Grand Columbia is a stock that's underperformed, and it's down the middle of the plate as far as some of the recent Chinese acquisitions. And so we think it's one that could really outperform in the second half of this year and continues to be cheap relative to its peer group. Jake?
Yeah, for other precious metal picks from my universe of coverage, I picked O3 Mining, which is now, after a recent financing, got a lot of money to pay for their drilling and other studies. They have close to $50 million in cash now. They should be drilling about 50,000 meters between now and the end of the year. And we'll have a PEA out on their Marban deposit in September, October. So we think they have some nice news flow and catalysts ahead of them. And we're big fans of the jurisdiction that they're in Val d'Or. We think that their thesis on adding ounces by drilling in between known mineralization and drilling deeper below certain known mineralized areas is starting to bear fruit. And so we think this is one that's lagged in the first half and due for some serious appreciation in the second half. The final precious metal pick we have here is Group 10 Metals, which you may recall was in the first half. I think it was doing okay, and then it got sort of dragged down when the PGM space cooled off because of COVID-19. But this is another one that recently financed, so they have about $6 million in cash now, and about $2 million in the money warrants. So they've got a good amount of money to start doing some exploration work. They're permitted on, I believe, over 50 different drill sites, and they should have some resource estimates, first pass resource estimates for 2 or 3 of their zones at Stillwater West. So again, another one with some good catalysts for the second half of the year. Continuing on to base metals, their first one we have here is a nickel name, which I alluded to earlier. It's called Chalice Gold Mines. Some of you might have been following this story with their recent discovery in Western Australia at their Julimar project. They, of course, raised a good deal of money as well. They've got 3 drills on the property. They're starting to make headway, and we're very excited about this discovery and think that that deposit's going to grow significantly. Our next base metals pick is Dore Copper, which is a relatively new company. I think it only came to market last December and is basically been under the radar. Copper was mostly unloved in the first half of the year. But this is one that is in Quebec in the Chibougamau camp. They have 3 or 4 deposits that we think they could quickly add resources to. And it's just not yet gotten the investor attention. It has a very high gold content to some of their resources. And I think that you could see some really splashy gold numbers out of some of their drilling that should have news out really any day now. Next on the base metals front is SolGold, which I think almost anybody knows if they've been following base metals for a while. We would just note that the hold period for BHP comes off mid-October. And of course, there's the Newcrest stake in SolGold of about 13.5%. It's rumored to be up for sale. So essentially, we think that this company could be in play and that something exciting could happen by year end. No guarantees there, but hopefully we get some corporate activity for that one. Next is Canada Nickel, which had some news out today and had a really big move, sort of surprisingly. But this is a new nickel story. Came out in January and have a very big lower grade sulfide nickel deposit just north of Timmins. They're working on a new resource estimate and are going to come out with a PEA by the end of the year. And this is kind of an analog to the Royal Nickel story, Dumont. Most of the team that helped drill that out and do the feasibility study is now at Canada Nickel. And we like the comparisons from Crawford to Dumont. We think it's got a higher grade core. It's got some more upside in size and a team that's already done it before. So we're expecting good things from them. And then lastly, our last base metal pick is a company called Rockcliffe, which we've talked about a fair bit over the last year. They have 3 PEAs due out sort of any time now. And whichever one produces the best results will get immediately put into a feasibility study. And they have some really good grade material there. They have access to a mill and tailings facility. And we think that this one is still cheap by any scale you look at it. And we really like the Flin Flon camp where they are and think that they're doing a good job. And we'll have lots of good results in the second half of the year as they continue to drill about 50,000 meters themselves. It's another one that still has a lot of cash on its balance sheet, so relatively safer risk there.
And the last name in our top picks is a uranium name, and we'll get into why we're bullish on uranium in a little more detail in a couple of slides. But the reason that GoviEx became a top pick is simply because it sort of is down the middle of the plate for what we think are going to be the most likely buyers of uranium assets. Both China and Russia are the largest builders of nuclear reactors in the world, and we believe that assets located in what normally investors would consider higher risk jurisdictions are the type of thing that they're going to be acquiring to fill the fuel life of reactor fuel contracts that they're selling with those reactors. So those are our top picks. And next we'll talk about sort of why we are so bullish on precious metals and gold. I don't think anyone has to, with gold at 1940, I don't think it's rocket science to think that we're in a gold bull market. And certainly something that we predicted at the beginning of the year. However, I can't say that we predicted COVID-19's particular impact. So we are here though. And we're at a very unique spot. Central bank balance sheets and sovereign debts are expanding at a unprecedented rate, and that's probably used that a lot for that word is used a lot around COVID-19 with respect to unprecedented, but you're devaluing fiat currencies, which is in theory very good for gold. The other thing is that gold is typically an attractive investment in low rate environments, and even as the balance sheet expansion potentially ends at some point, maybe the rates are going to be low for a long time. If you use the 2008 financial crisis as any kind of metric, it will be 5 to 10 years before we see rates sort of normalize, if you will. And the one thing that we like about gold bull markets, and it's something that we've always been pretty adamant about, is that small and mid cap companies outperform over the long run of the bull market. Early on, you see the majors do very well, and usually it rotates, it moves down market cap, and eventually the small cap guys outperform, and that's on the back of M&A and majors trying to fill their pipelines. However, and this one's been a little bit unusual. We've seen the large cap companies outperformed, and then it went straight to the speculative micro cap or small cap names, and sort of the mid caps haven't yet. And I think that's something to watch as we're up on Q2 earnings season. Watch those mid cap names. If they start to have really good earnings, you could see them start to move as well. Second thing in precious metals that we're constructive on is M&A. We've just basically seen the start of it. I think we've seen some good early cycle deals that are panning out very well. Kirkland Lake buying Detour, some of the Chinese companies acquiring Guyana Goldfields, TMAC Resources, bids for Cardinal, and so I think those types of transactions, those unloved assets getting picked up, are something that could continue going forward. And I think one of the other things that we saw just last week after we put this report out, but it is important, is IAM Gold last week announced that they were going to start construction or build Côté Gold project in Ontario. And this is a high leverage, big capex project, not something that the market has been in favor for a while. And if they had put that news out 6 months ago, I think the market would have been off 15 to 20%. I think the fact that they put it out and the stock outperformed its benchmark that day is just a sign that growth matters now to investors. And as we've been marketing this report over the last week and a half, we've seen that as well. So I think that this is something that's important, and that leads that need for growth for a lot of these majors leads to M&A, especially in the larger developers. Developers and larger developers, I mean developers with larger production profiles. Lastly, on one of our key points is where gold goes, silver follows, and we timed this report pretty well because that theme was announced right when we published the report, and the silver price has really been moving since then. And I think we're of the view that 80 to 1 is in reach as a easily, and we're also of the view that could go lower in the fervor of a bull run. We know silver can hit very high peaks, and so we're going to continue to watch that market. And then the last element in precious metals it is PGMs, and they are more of an industrial metal than the traditional gold, traditionally than gold and silver. But I think this is important. The strong fundamentals that we saw at the beginning of pre-COVID-19, we expect to see post-COVID-19 as economies start to reopen, and that could actually be accelerated by the fact that if economies open faster from a demand perspective than a supply perspective, particularly in South Africa, where I know that COVID-19 is having a meaningful impact, that you could actually see those prices run ahead of the economy reopening. And again, here we just reiterate our top picks on the precious metal space. Jake, on base metals?
Yeah, so we didn't have much direction, if any, when we put out our first half piece, and there was almost no focus on base metals at all. But copper has emerged since the advent of the COVID-19 shutdowns, and we expect that that's going to keep it strong for the foreseeable future. We've even seen zinc, unloved zinc, almost hitting $1 today, which is another positive sign for base metal demand. On the nickel side, the nickel market took a hit, of course, because the EV revolution or evolution that had started previously was put on hold as most people deferred making large purchases, especially for vehicles and things like that. And then the drop in oil prices, which was totally unprecedented, earlier this year, I think probably put a little bit of a damper on the idea of electric vehicles for some buyers. But we expect those things are going to come back. It's sitting at just over $6 for nickel in an environment where we don't have any real global growth yet, outside of a couple of places like China, is pretty bullish for the metal in general. And when we get to a more normalized time period, as we start to, as a world, climb out of the recession that we're in, I think a lot of governments are going to greenlight big infrastructure projects, which is always a boon for steel and therefore nickel prices. So, not ringing the dinner bell yet for a bull market in nickel just yet, but things are looking very constructive. So, more specifically on copper, I think most forecasters that we like to follow, we're looking for a deficit in supply this year and for the next several years. But one of the things that's happened in the copper market is that virtually every development for a new project or an expansion has been shelved at this point, with the one exception, of course, being Ivanhoe's Kamoa project in the DRC, which is blazing ahead at amazing speed. But everything else is been backburnered and put on hold, and we don't expect those things to come on anytime soon. And so we're actually seeing people now who are forecasting a potential deficit in copper this year and next year. So there's another thing in the copper space is that we don't really have kind of like the mid-tier copper producers that we had, a decade ago. It goes from the super majors on down to small explorers pretty quickly. So I think we're going to see a round of exploration and maybe some new discoveries in the copper space. And the stimulus is going to come as we get out of this scenario we're in now financially, could lead to copper getting up to its big highs that it hit from back in the last decade. And then nickel is being supported by two big things: the moratorium on new mine development in the Philippines, and the stopping of exporting of nickel ore from Indonesia to try and force the market there into building out smelting capacity. Now, both of those things can change, but so far they've held firm on those two aspects of the nickel market. And a lot of people don't realize quite how much nickel was coming out of Southeast Asia. I mean, between New Caledonia, Philippines, and Indonesia, you're getting about 45% of your actual nickel units right now. So nickel in good, safe, investable jurisdictions is going to be extremely important once the markets get going again for nickel. So just keep an eye on that. And then again, we listed our base metal picks below here.
And then the next commodity we get into is uranium, and I think we've been squeezed into a bull market, and so sort of three things have happened that brought what we thought was going to be a medium-term supply deficit forward and push us ahead. It's almost as if the shutdown of Cigar Lake has kicked off another bull market. So COVID-19 really accelerated that supply deficit. At the beginning of this year, we would have said that the market was going to be about balance, maybe slight deficit. And in reality, we're going to end up with a 10+ million pound deficit in 2020. And that drove some very unique trading, but has driven the spot price up about 30%. And that's our second point: is the spot market's been drying up. Almost 50 million pounds contracted. For context, it's only about 180 million pound market in uranium, and so for 50 million pounds to transact in the spot market, which is like a normal year's spot transactions in the first 5 months of the year, is an impressive amount. And with that market tightening, with the primary buyers were actually producers who had shut down mines that needed to meet contracts, and traders who are needed to also meet medium-term contracts, but wasn't driven by utilities. And utilities, particularly in the U.S., have a bit of a deficit going out, a bit of a significant uncovered demand out into 2022. And so they had been supplementing their inventories from the spot market and from carry trade, and they're not going to be able to do that. So we think long-term contracting is coming, and long-term contracting really is the key. The spot market can move up and down, but mine restarts and real mine development isn't going to happen without a significant move up in long-term contracts. There's no, other than very few, there's virtually no assets that work at $30 uranium. So, and you know, we talked about why the spot market's thin, but also the midterm contracts have really, also known as the carry trade, have declined. And these were uranium traders that would arbitrage the gap between the spot price and the long-term contracts. And that structure in and of itself, it doesn't work with the prices lining up. And so they're not going to see new contracts, and consequently utilities can't supplement inventories from that. The other thing is that a lot of the policy obstacles that were in the way of U.S. Utilities contracting have moved out of the way, particularly with the nuclear fuel working groups announcements being made. And then lastly, those U.S. utilities, which are the world's biggest buyer of uranium, and obviously the world's biggest independent buyers of uranium, or non-state sponsored buyers of uranium, they're in a situation where they've had to hold off on contracting because they didn't know the rules of engagement. And now they can get back into that. And by getting back into that contracting, they can get back into that contract, but they also have significant uncovered demand going out to 2022. A typical long-term contract delivers in 2022. So that gap is going to start to close. And we're going to start to see those long-term contracts. Either they're going to have new long-term contracts or be very active in the spot market. Neither way, I expect to get a bit of a run in the uranium price and in uranium equities later this year.
So moving on to rare earths and battery metals. So we were very surprised, encouraged by the U.S. Army that announced they would help fund up to 2/3 of U.S.-based pilot plant refinery space CapEx for heavy rare earths, which was the first market investment the United States Army had made since the Manhattan Project. Essentially, the COVID-19 situation completely turned that on its ear, and there's just much bigger structural issues in the economy and dealing with the virus that the governments have to work with to focus on for right now. Eventually, we expect to see more U.S. and Australian and perhaps even Canadian government subsidization in this sector, which could be very impactful for some of the rare earth companies. There was an announcement out today by one of the producers in Australia that said they did completed another agreement with the United States government. So there's a potential that this sector might come back into favor. But on the negative side, China actually raised their annual rare earth element mining quota by 6% for this year to a new record annual high. And this is essentially a retaliatory trade war program, as the relationship with the United States and the Chinese have been strained recently for various geopolitical reasons that we won't get into. And for battery metals, obviously it's going to depend largely on electric vehicle penetration, and eventually will be positive for lithium and cobalt, as well as green initiatives could increase the usage of these metals. So we like companies with a path to production in this space, and not just a general play on the commodity. But we really need the global economy to be restarted and firing on all cylinders before these metals are going to get much more bullish in our minds. So we produced what we called an endangered species list in January. These are companies that we felt had a stronger chance of being acquired or receiving some kind of takeover bid in the next sort of 12 to 18 months. We didn't have any of those companies that we chose actually receive any takeover bids in the first half of the year. But as a group, they performed very, very well. The leading performer was Teranga Resources, which was up close to 80%. So we felt like it was time to update those picks, and we removed 3 from the January report that we had and added 3 in. So the ones that came out are Platinum Group Metals, Teranga, and Wallbridge. And the ones that are going in are Alexco, a company called Goldex, and Gran Colombia. So maybe we'll just talk briefly about those 3 additions. Alexco is a silver near-term producer. They're fully financed. They're fully permitted. They're located in the Yukon in the very, very prolific Keno Hill district. They're set to start producing later this year. This will be the highest grade silver miner in the world next year and can produce about 6 million ounces of silver at very competitive costs, and really hasn't seen much of a move in the stock market yet. So we expect that to change in the second half. Derek, maybe you could talk about Goldex?
Sure. Yeah, Goldex Mining is for those of you who've been around the space for a while, is formerly known as Sand Spring Resources. The company has the Toro Peru project in Guyana, and it was actually subject to a takeover offer earlier this year when Gran Colombia made a bid for both it and Guyana Goldfields because they saw synergies between Aurora, Guyana Goldfields project, and Toro Peru. Those synergies still exist. Even though Gran Colombia was unsuccessful, and we think that Goldex, particularly with Robert Friedland on board as the chairman, is likely to be a target of Zijin, who ended up being the winner in the Guyana Goldfield sweepstakes. And so remember that Mr. Friedland is partnered with Zijin at his copper asset in the DRC, and so a very good familiarity there. So we expect that asset that company does not have a long life ahead of it, and that company the Guyana Goldfields transaction closes late July or early August, and so this could be certainly be a path to could be some near-term activity in Goldex. Our third edition was Gran Colombia, and obviously we talked about this name earlier. It is a top pick of ours as well, but the recent Chinese buying looked at assets that have sort of been unloved in sort of medium to higher risk jurisdictions, and we're trading at a discount for a variety of reasons, and I think Gran Colombia is sort of down the middle of the plate with respect to that. Additionally, I think one of the things about Gran Colombia is it's room and pillar mining. It's a little more labor intensive, and that's certainly something that Zijin and Shandong Mining, who have been the active Chinese companies, aren't afraid of. And so I think there's a chance that this company ends up being on the target list, especially at plus 200,000 ounces a year of production. So I think with that, the next slide up the next slides are our coverage list, and I don't think we're going to go through that in any kind of detail, but I think from this point on, we're going to open it up for questions and the Q&A portion of this webinar. So we're happy to, we'll try and answer any of your questions. If it's about companies on our coverage list that we follow, companies not on our coverage list, if we know it, and we can answer credibly about it, we will. And on the macro, if it's specific commodities, whether it's uranium or nickel or copper or gold, are happy to take your questions. Maybe to start with, Jake, I'll ask one of you on Canada Nickel. What do you think? I mean, obviously the nickel assets are pretty rare. That stock's on a bit of a tear today. Maybe talk about why nickel assets are so scarce, and Elon Musk is tweeting about them.
Well, I think the timing is good for Canada Nickel to have that press release out today after Mr. Musk was talking about encouraging people to get more nickel mines into production, especially green nickel mines. It seems like what companies like Tesla need for their batteries is to continue to include nickel in them. They're not going to get the amount of power for the weight and the size of them without having nickel in them. So Mr. Musk wants as much nickel to be produced as possible, and being that Tesla is an electric car company, they're very much in favor of zero or no emission nickel. And the Crawford Nickel project, the host rock there is a serpentinite, which has been shown to actually capture CO2 when it's exposed to the air. So the idea being that whatever greenhouse gases could be emitted from the possible production scenario get pumped into the ground, and then that CO2 is fully absorbed, and so you basically get nickel being produced with no carbon footprint. So it's sort of at the kind of pilot scale now. There's been some work in it, but it's certainly very interesting, and it could be very important for the company in the future.
That's the nickel contract you want, the Tesla offtake agreement. It's both headlines and headlines and production, I guess. Sticking maybe with the base metals, on doré copper, one of your other top picks, Jake. Maybe talk about a little bit about the upcoming catalysts and how much doré copper exposure has to gold.
Sure. So doré is drilling again in the Chibougamau camp. They should have some results out very shortly here. Some of the gold results that have been produced in that part of Quebec have been some of the highest grade gold hits. We expect that when they get around to having a resource calculation, probably next year, that about 50% of the value of the ore that they are looking to uncover is probably going to be in gold, and it certainly hasn't moved with the gold price at this point. So that's one of the reasons why we're interested in that one. We spoke to a lot of accounts about this. I felt like most people didn't really know about it, and the people who were constructive on copper, they really like the idea that there's a fair amount of gold that comes with it. It's easier for people to get excited on copper gold than just on copper itself, which I think makes sense for most people.
Right. Yeah. This one's for me. It says, "What's your view on U.S.-based uranium companies? For example, Ozarga, Laramide, and Encore." We cover Laramide. We don't cover Ozarga or Encore, but I got to maybe speak a little bit generally about U.S. companies. The U.S. announced that they want to create the Strategic Uranium Reserve, which is going to benefit a few producers in that category, and might drive some consolidation as those contracts are doled out. But the U.S. government is much like they are in rare earths. They're putting a lot of effort forward into developing domestic uranium supply, whether that's on the processing side or on the mining side. And so I think they all stand to benefit for the most part. I think companies that are, the sort of the traditional ISR producers that exist, those are the ones that are likely to benefit the most, because the Strategic Uranium Reserve is small generally, but I think that's just a part of where they're going to benefit. The other thing is that uranium companies in general, and I think the Section 232 and nuclear fuel working after is a bit of a red herring on the uranium space. Uranium fundamentally needs to go north of $50 a pound, and it doesn't matter where your asset is located. If uranium hits $50 a pound, your stock is going up, and it doesn't matter whether you're in that cycle or not. But the U.S. government trying to do all it can to develop domestic uranium production, I think, is important, and will benefit those names. The one thing I would add about the U.S. is you have to be very certain which state you're in and where you are, relatively speaking. There are a lot of potentially local issues around uranium development, and so you need to be very careful with names when you're looking at them. It's important to look at the area and see if there is an there's a group opposing that particular project. Question from on Silver Standard for you, Jacob, or Southern Silver, sorry.
Yeah.
Silver Standard company that's been renamed into something else. Southern Silver. What are now that the private placement's done? What are the expiration plans? And I guess probably the next question, on follow-on question, that would be, when do you expect to see news flow from them?
Yeah, so the private placement was upsized to, I think, 10 million Canadian. It'll be closing either today or tomorrow. The funds will start to flow to the company right after that. They've been chomping at the bit to get back into the ground and start working. And this is one of the companies where they have teams on the ground and ready to go there, so they can start moving relatively quickly. I believe they've put in orders for 2 drills, and they're going to do a couple of things. One is to drill off some areas that had some really high-grade silver, upwards of 500-600 grams per ton silver, and trying to add in some of the potential, really high-grade ore to their deposit. And then they'll get out and do some earlier stage drilling on the western side of their Cerro de las Minas ground. So I think that there'll be a good amount of news flow coming from them. They haven't had this much money to work with in quite some time, so they'll be trying to move as quickly as they can. Probably you could see results maybe starting to come out in about 3-4 weeks' time.
And then another question from the line here, and I'll let you go first. But what names outside of your coverage list do you like right now?
Derek and I have been investing in some silver names. Most of these are smallish and exploring in Mexico, but in sort of kind of more established mining areas like Durango and Chihuahua. So one of the names that I invested in, and I think Derek, you did too, was Orex, which is kind of a sister company to some of the other companies on our platform, and looking forward to seeing some results out of them. On the very large side, the one large gold company that I own is Kinross. I used to cover it at a former broker, and I just think that it's got a lot of leverage to gold. It's got a lot of production, and they're being very careful about how they're spending their money, and they're not going to be one of these companies who goes out and starts to acquire a whole bunch of other companies, which is something they did in the past, and I think the market has told them that they need to just work on their own portfolio for some time. Another one, not in our coverage, but I've been keeping an eye on, is a company called Sokoman, which has a low sulfidation epithermal gold project in Newfoundland. They've about to start their biggest drill program ever. So I think this is a company that's got a lot of upside. I like what I see, and I like the way they're doing things. Maybe Derek, you could throw out some names that you don't cover that you're interested in.
Yeah, so one of them is it's on our endangered species list, but it's one that I liked prior to that, because it sort of knew what was coming and it underperformed, which is Alexco. I definitely like the grades there. I like the fact that it hadn't performed at the beginning of the year, and basically there were 2 overhangs: the getting the final permits and the financing, and both those things happened. And so now we've seen the stock react a little bit. I think it's got more room to run from that perspective, and high grade silver is always rewarded by the market, especially in this part of the cycle. The other I had it at the tip of my tongue, and then I forgot which company I was going to talk about. One of the other names I like, and it's a one that has been it's been trading okay, and is Gold Source Mines. Gold Source is exploring Guyana. It looks they've had pretty good results, and I think they're back exploring now. But I think the reason a lot of people like it, including myself, is for the most part it's the Silvercrest team behind it. So guys who know really how to create value, and at another project. So I think that those are two in my that are in my portfolio, my personal portfolio that we don't formally cover. And one other one that's a big cap that most people know is Kirkland Lake, and I think it's a name that's I guess frankly I've owned it for a while, actually, since they announced the Detour transaction. But it's one that's basically underperformed early part of this year, and for a company that size to underperform, usually get a bit of a rebound trade here. And I think market's going to wake up to how much cash flow it's going to throw off at $1,900 gold with that Detour acquisition. So looking forward to that. One question, Jake, and maybe outside of your top picks, are there any names that you think have potentially underperformed in the first half that you think could have a really good second half that maybe you didn't quite make it as a top pick in this round?
It's hard to say. I think that in general, what we've seen and what we've heard from some of our marketing in the last week is that people are looking more down cap, and it seems like the names that are moving the most and moving the quickest are some exploration stories. People are really interested in, say, North American-based exploration stories where you can get a lot of torque from even one drill hole, and we've seen a few of those. Fortunately, we've been involved in one of them, which was Black Rock Gold, which had a phenomenal hit, and was able to raise some money, and I think is an exciting story that we as of yet don't cover, but probably will at some point. So I'm very interested to see some more drilling come out of them. I think their deal is set to close this week, perhaps late this week. And they actually have a batch of about 3 or 4 holes ready to go. So there'll be a press release maybe as soon as next week, and hopefully they can put out some results like they had last week, and we'll be off to the races with that one.
Yeah, one name from my coverage that I'd mention is Vista Gold. Big. 9 million ounces in Australia, the kind of asset that does very well in a gold bull market, and really, relatively speaking, underperformed because it is waiting on permits. So I think that's one that you could see, especially if they come through with a development partnership that could really move in the back half of the year. And the inevitable question that we get on these things are, what are some names that you don't like or you think are fully valued at this moment? I'll let you go first on that one.
I mean, I would kind of say, some of your biggest gold companies, like something like Barrick, I don't think you get very much torque in it, and I think they're more likely to buy something. And that could, hurt the share price depending on what it is they buy. They've been talking for quite some time about adding to the portfolio. They've talked about adding things in Canada. They've talked about adding copper. Personally, I don't think most of the Barrick shareholders want that to happen. So we'll see. So that's one that I would sort of stay away from, so to speak.
I think you could probably spread that across to most of the majors who have been preaching fiscal discipline over the last 3 or 4 years, and so a quick change from that could be considered construed as negative. Although with this market, who knows? I don't have. I'm not going to say any particular names because it is a bit of a challenge in this environment, because you could think something's fully valued at 1,950 gold, and then it's 2,000 or has a good drill result, and the market reacts very quickly to it. It's very dangerous to be. It's one of those things where you might not be invested in the best stock, but you want to be invested. Cash is not the place to be at the moment. So I'm hesitant to really push anything like that out there at the moment from our coverage universe. So I think with that, I think we've got through all of the questions. So thank you everybody. Thank you everybody for attending. We really do appreciate everyone's engagement and being on the line today. And let us know if you have any questions or comments going forward. We're actually fairly easy to reach through the research email. So and as a reminder, we continue to have a torrid pace of webinars here at Red Cloud. So tomorrow we have an afternoon conference, our Summer Silver Conference, starting at noon Eastern. And you could go onto our news and media portal to sign up for that. On Wednesday at 2:00, Jacob's going to be hosting the Thunderstruck Resources webinar, and at 4:00, our chairman Chad Williams will be hosting a Troilus Gold webinar. So lots of upcoming events, and that is certainly not all of them going forward. So please stick to our news and media page, and there'll be more there. Thank you, everyone, and we'll see you soon.